Okay, we are recording. So this is episode 3 on Jordan Fiore's YouTube channel. First 2 episodes was with a lender, all lender knowledge, value stuff right there. Wanted to bring on someone different. My go-to property insurance guy. Usually I'm not in the talks with my clients and property insurance. I relay them off to Ben Rader at State Farm. Ben, if you can just say a couple quick things on how long you've been in insurance, State Farm and whatnot, and we'll get to it.
Yeah, absolutely. Thanks for having me, Jordan. So yeah, I've been with State Farm, been an agent for 7 years, was a team member prior to that for a few additional years. So been with State Farm for about 12 years total on that. My office is out here in Westchester, primarily helping out with auto and home, property insurance, rental properties, so on and so forth on that. And so we've had a great relationship, and it's been great for me out here in Westchester. And looking forward to our call today.
Yeah, it's always nice to drive by your sign. Ben Rader, State Farm. I'm like, that is dope. I want to have a sign. Jordan Fiore, eXp Realty. One day it's
yeah. Oh yeah.
So yeah, just real quick getting into it. I guess for my part of it, when purchasing a home, we usually have 14 days to kind of figure. We have a 14-day usually property insurance contingency to where. What do you need, Ben, essentially to get a quote to a client within a certain time frame, even if you don't have, so this is just a single family, even if you don't have the inspection report or anything like that, like what do you need from them?
Yeah, it's actually pretty simple on just a regular single family home, just new purchase on that. Just your typical personal information. So the address of the property you're purchasing, date of birth, that sort of thing, just as personal information. So that's obviously really simple to get from the purchaser. And then from there, it makes it really easy if the house is on the market, because all I have to do is go to the photos online. And then what we do is we plug in all the characteristics of that house into an estimated replacement cost tool. That's going to spit out a number to us as the insurance company saying, okay, you may be purchasing it for X amount, but we look at replacement cost coverage. So in the event that there's a total loss, a fire or tornado or something like that, and the house is destroyed, what it's going to cost to actually rebuild that home. And so that's what we do based off photos online, auditor site. And obviously I'll have a conversation just to confirm a lot of those details with the purchaser. And it's pretty simple. I can get that, taken care of pretty quickly.
Inspection, like when's that? The inspection is usually after closing for that,
right? Yeah. So with just a quote, that's what we would put together just to get a quote started on that. Then an inspection occurs. Typically, I like to have a follow-up conversation, with the person who's purchasing the house. Hey, what did the roof look like? What did they say about this? What did they say about that? So on and so forth, just to make sure got all our ducks in a row before.
But they can't just lie, right? Like if the roof is old, they tell you something new, and then after closing, you kind of find out the true story, and then obviously the quote can change or the amount, correct?
Right. So so like we mentioned, I'm with State Farm, so I'm captive. I can only offer State Farm products, and so everyone's process with that's a little bit different depending on what company you go with. So some companies might require the roof has to be within 10, 15 years old, or they won't even accept an application to be considered on that. And whereas State Farm, there's no rule on specific age. It just has to be in good condition on that end. And so typically, on the application, we'll list the age of the roof. And then from there, when we submit an application, it actually just gets randomly selected on whether or not State Farm will actually have a survey done of the property on that. And so I don't know that until I submit the application. So I kind of just tell people up front, like, hey, once you close, that's when we submit the application. That's when State Farm will then decide if there's going to be a review, of the exterior of your home, so on and so forth. And it's not just roofs. That could potentially be, that's obviously the biggest issue for most people is, a potential issue with the age of the roof or something that didn't get repaired correctly or what have you. But it could be other things as well. Typically not for a new purchase, but it could be things like you've got trees and shrubs up against the house, you know, we consider that a liability issue. Those ones are pretty simple though, just to get cleaned up, you know, on that. And so it could be a few different things.
Okay, and I guess a quick question for the state of the insurance market right now. So the past couple of years, we know inflation has been rampant, but the increased premium cost is not just inflation related, correct?
Correct. Yeah. So inflation, I'm obviously getting sick of using that word, been using it, and everyone's probably sick of hearing it because obviously it was a huge factor after COVID and, you know, still up to this point. So that's a factor. The other couple things are the frequency and severity of major storms. So we had an internal call that kind of just compared, they call them convective storms in the insurance industry. And basically what those break down to are severe thunderstorms, including hail, half an inch or larger. It's about 4 times as frequent as it was like 15, 20 years ago. And so obviously
in the nation, right? Not just Cincinnati.
Correct. Okay. In the nation. But we're in a pretty big area where that's very common, especially the wind and hail that come through Indiana, Ohio, Kentucky on that end. And so that's a pretty big factor. Obviously, cost to repair roofs or replace them, contractors, materials as well, kind of goes in flux with that inflation conversation. But those are the major factors with the increased prices. Okay. Yeah.
And then I guess for any viewers that live, because I mean, Cincinnati, we have buildings over 150 years old, 125 years old, to where like in Oakley, Hyde Park, Norwood, I've done multiple transactions there. I feel like there's been a change of the past couple of years, the electrical. So knob and tube here in Cincinnati, what is insurance? What's State Farm? What are you looking at when it comes to, hey, the past couple of years, we actually can't do knob and tube whatsoever. So if your house is knob and tube, make sure you get, a quote to remedy that. And then you have to have it done within 30 days. What's your guys' requirement for, my Oakley, Hyde Park, Norwood clients, to where they have remnants of knob and tube, but they don't know, if it's all throughout the house or anything like that?
Yeah, it's a good question. So again, me as a captive agent with State Farm, we've never been able to do knob and tube. We're pretty particular on that, but obviously you've got your independent agents and companies that would consider it on that. Now, as far as what their stipulations are, could be a lot of different things. You could have to have a licensed contractor go out and inspect it, have a written contract saying it's still safe. That used to be an option on that. I know they might have to do it full electric replacement. Now, typically in a situation like that, let's go back to, if you don't mind, like when we submit the application and State Farm says, okay, we're going to do a survey, right? And they want the roof replaced or what have you. They will still insure that property, typically anywhere between like 30 to 60 days to allow you the opportunity to make those repairs. Submit the documentation that you've done that, and then State Farm will continue the insurance just as we applied for in that instance. And so that's kind of that piece. Now, as far as why that's significantly changed recently, I don't have a exact reason other than this kind of goes along with the overall arching of the conversation. No, everyone's insurance has gone up, homeowners insurance, no matter what company you've been with. The homeowners insurance, rental property, any property insurance companies have not been profitable over the last few years. So for an example, here in Ohio, for every dollar that we've taken in, we've roughly paid out $1.16.
Okay.
So we're losing about 16 cents every dollar. So it's obviously not ideal for an insurance company on that. And that's almost every company is somewhere in that. They're paying out more.
That's why we're seeing these big changes over the past couple of years, correct?
Correct.
That it goes back to that, the money.
The bottom line. Yeah. And with insurance, it's a little bit of a lag. So, if we had a bad situation occurred last year, you're not going to see that really hit your premiums until this year. Something going on this year is not really going to see until next year, so on and so forth.
I think a lot of people don't realize, so the stuff, like in Florida and like other catastrophes around the nation, that does affect what you're paying on any type of insurance, property insurance here in Cincinnati, correct?
Generally speaking, yes. Yeah. So I can speak for State Farm for an example. So we have State Farm Fire and Casualty Company. That's where your homeowner's insurance is placed here in Ohio, as well as pretty much every other state except for a couple. So like California, State Farm has a separate company for specifically. And so like the California fires and so forth aren't going to affect our premiums here. However, bad storms in Florida, North Carolina that happened are going to slightly increase premiums even here in Ohio. It is subject still to the risk in your area, but if the overall company is struggling, everyone's going to feel that.
Yeah. Okay. That makes sense. I feel like a lot of people don't know that because I didn't know that. That why does it matter? But yeah, it's the overall company, the dollars. That makes sense. So another quick question: what's the difference between replacement cost and actual cash value cost? Because you can offer, or I don't know if State Farm does or something, but you can offer either or what do you recommend? Obviously, when it's your house, how to go about doing a replacement cost or an actual cash value.
Yeah, absolutely. So we get this question quite often. It's a very big deal. And so replacement cost versus actual cash value, the best example that I can give, we're going to stay on the roof theme here. And so obviously the most common claim is going to be damage to your roof, a major windstorm, hailstorm, tornado, what have you on that. And you file a claim saying, you've got severe roof damage. Insurance company comes out, agrees like, hey, we need to totally replace your roof. That's going to cost $20,000 to replace your roof, for an example. Okay. So with a replacement cost policy, all that you're going to pay for is your deductible. So let's say your homeowner's deductible is $2,000. State Farm in that scenario would pay out $18,000. You're just on the hook for the $2,000. Okay. So that's replacement cost.
Okay.
Actual cash value or depreciated value takes into account how old your roof is. Okay. So Allstate, obviously another big company, they primarily use actual cash value, which it can also be called a roof schedule. So same example, file a claim and you've got an actual cash value policy. Roof is totally destroyed, needs to be replaced. Obviously it still costs 20 grand to replace that roof. Same thing, if you've got a $2,000 deductible, you're going to owe that $2,000 deductible. However, with a depreciated value or an actual cash value, they are going to deduct depreciation from the age of your roof. So for an example, if your roof is 10 years old, they're going to say, hey, we're only going to pay 70% of the $20,000 that it actually costs to replace your roof. For an example. So if you just do that quickly, they're only going to pay you $14,000 compared to $20,000 in a replacement cost policy.
So why would anyone do, I'm assuming replacement cost would be more for your premium. Is that the only?
Correct.
Okay.
Yep. So that's the biggest difference. So you're going to see, some companies maybe a couple $100 cheaper, some just 50, $100. But when people don't really take the time to review the policy or have a conversation with an agent and they're trying to get the lowest price possible, that's how they end up typically with an actual cash value type policy.
I got replacement costs, right, on mine?
Absolutely. Yep. 100%. Yes. That's all we do here at State Farm, but I mean, that's what a lot of competitors are roof schedules. And so that's the conversation we have on a daily basis here is, hey, here's typically what Allstate or X or Y or Z company typically provides. I want you to look at the quote or send me the quote. I'm happy to talk through it with you, show you the differences and show you why that might be $300-400 cheaper a year. And so what we try to get back to is obviously, I've got homeowners insurance as well. I don't want it to be expensive. I'm on a budget as well on that end. But the way we look at it and the way I try to have conversations with clients is your home is typically your biggest asset, right? Or one of your biggest assets. It doesn't always make the most sense to insure your biggest asset with the lowest bidder, so to speak. We want to make sure we're protecting that properly. You've got adequate coverage, so on and so forth. So those are conversations.
Dang, that's a good one right there. That's a
Yeah.
good one.
Yeah.
Okay, yeah, a couple more questions regarding what clients that are already with you can do of reducing their premium. Like once they get a new roof, they should report it immediately to you to lower their premium, correct? Or any type of
Absolutely.
new electrical. Is there anything else? Does the premium go down the very next month, or do you have to wait till the following renewal year, essentially?
Good question. Yeah. So if you're a current client, you call in and say, "Hey, I looked at a roof," you would see that at your next policy renewal, most likely, as
Okay.
far as the decrease.
So the renewal part of it, correct?
Correct.
Okay.
Yeah. So you replace your roof July, your policy renews in October. You'd see that in October as far as any
Okay.
savings on that. State Farm specifically, they've also have additional discounts if you get impact resistant roofs. So I've had a couple clients do that. I do think it's a couple extra grand to do that, but it
Impact
is.
resistance? What the hell is that?
Yeah. So hail impact resistant. So
The
I think it's like
shingles, like just like the bouncy.
it's like a higher grade shingle, and so I do think it costs you an extra 3-4 grand on the actual shingles themselves.
Oh,
It
okay.
saves you another 100, 200 a year in your homeowner's insurance. So,
Could add it up. Makes
that
sense.
is, yeah, it could add up over time on that end. And also State Farm takes that into account if there ever is a tornado or an event where we have to replace your roof, we're going to replace it with that type of shingle as well. That
Oh,
higher grade shingle, right? So that's
okay.
why you definitely want to tell us if you have that.
Yeah, we'll
as
go
far as
ahead.
that.
No, anyone. Yeah, no, that's cool. Anything else that I'm missing with that
Security
can?
systems. So yeah,
Okay.
if you have a security system, specifically one that is monitoring and directly reports to a central station or directly to a police station, like for fire and theft,
Oh,
burglary.
I didn't even know that. That makes
Yep.
sense.
Yep. So that's a big one. But your point about electric, that's if you get a full upgrade, that's definitely call us. And then just generally speaking, as far as coverage is related, if you we've talked about this. If you finish your basement, you add square footage to your house, make an extension to any finished square feet. Just making sure you call your insurance company to make sure you're protected for that.
Yeah. Okay, that makes sense. And then a couple other questions of like, do you ever get the question of what's the difference between homeowners insurance and home warranties? Because some
Yeah.
people think, oh, okay, I should be covered here, but then they call you and you're like, no, that's not us. That's your home warranty
Yeah.
that you don't have.
Yeah. So I'll talk through that a little bit. So, homeowners insurance, generally speaking, it covers things that are accidental or sudden, and not things that are over time on that end. So, for an example, like you just have your furnace is 20 years old and one day it stops working, right? That's wear and tear, old age.
I'm
Yeah,
calling you.
yeah, right. So that's going to be more of something where a home warranty, if you want protection for something like that, is going to be helpful to you. So home warranties, from my experience, typically do cover old age, wear and tear, those types of things. So, and they cover your major appliances, right? So your furnace, your AC, your hot water heater. Some may even offer coverage for like washer and dryer, refrigerators, those types
Yeah,
of things. With that, different warranties would have, a monthly premium. They may have a deductible once something happens, maybe not, as far as that goes. So that's your home warranty. If you're concerned about kind of those typical, okay, now I'm a homeowner, one of these appliances can go bad, that you would want to seek that. And you could correct me if I'm wrong, but it seems like that's pretty common when you purchase a new house, that's included in the first year. As far
yeah. It
as,
just depends if we're putting
okay,
it in there or not.
I got one on mine. I was like, okay, I'll take it. So that's,
Yeah, it's nice to have. They're like $500, especially if you go through inspections and HVAC's 20 years old, hot water heater's 25 years old or something like that. It's not a bad idea to get the home warranty for the next 12 months, because that'd be nice to get those covered. But okay, yeah, no, those are that's good information on the differences, because I know a lot of people don't know them. And then I guess last question would be for the difference between how you look at single family to my smaller multifamily clients, the 2 to 4 unit, what's the process when it comes to the difference between single family, 2, 3, and 4 unit, if there's anything?
Yeah, absolutely. So whether it's State Farm or any insurance company, it comes down to your risk exposure in a situation like that. So if you're comparing just like a single family home compared to like a 4 unit, for an example, it's pretty easy for the insurer to, um, hey, we only have to insure this one family or one person in this one house, so on and so forth. Whereas a 4 unit, you've got 4 different exposures. You've got 4 different things that could possibly happen in each unit that can affect all the units as well. So just comes down to exposure, right? So one person starts a fire in their unit, all of a sudden that might be destroying the entire building. And now you're talking about personal property for each person in the unit, all 4 units, so on and so forth. The other thing that typically comes up with just the cost related to that is to rebuild a 4 unit compared to a single family dwelling typically is much greater than on the 4 unit side compared to a single family dwelling. So that typically is just where the cost for a policy for something like that is more expensive.
Okay. Yeah, no, that makes sense. So I guess, I mean, we're running probably on 20 minutes here. So we'll wrap it up. Anything, Ben, that I might have missed that like the past 12 months has been kind of going on in your industry or anything like that with property insurance?
We kind of talked about, obviously, most people, like I said, we're all on a budget. We want to keep costs low. And that's on the front end. I look at the back end of, hey, I want to keep it as cheap as possible for you as well, but I make sure you're covered in the event, something major happens on that. And so my thing is, I still think there's a really good value in having an agent, whether it's State Farm or independent or so on and so forth, not just hopping online and plugging in some info and you don't really know what you got. And so a lot of
Do you
times
ever
that
get
will
that,
happen.
dude? Does someone ever just be like, hey, I got this, can you beat it? And you're looking at like, I've never heard of that company in my life. The coverage probably isn't as good as your guys' coverage, I'm assuming.
Absolutely. So you've got a lot of them that probably target the Gen Zers, let's just say. You got the Lemonade and a few other ones. Yeah, so
the hip, cool companies, yeah. No, that's fine.
yeah, so it's just they try to make it suitable where you don't have to ever talk to anyone, which sometimes I totally understand that, right? But your house, you're buying a house, like I said, one of your biggest assets, if not your biggest, and all of a sudden tree falls on your house, tornado comes through, and now you're trying to go on an app to figure out, who do I text, to figure out what I need to do.
Yeah.
Not typically ideal. And so I really just, I still believe that, having a local office, local agent, there's value in that. And so just trying to push that with price increases, changes in coverage, whatever it is, the only thing that can remain constant is the people that you're dealing with on that. And so I would say that's the biggest thing if you are considering, shopping your insurance or you're in a position where you're buying a new house, and just consider that as part of your purchase process. So.
All right. No, that's a good point. I didn't really think about that. Okay, sweet. Well, Ben, I appreciate all this information. We could probably go another 40 minutes here and not even blink. And I'd still have more questions for you, but I appreciate it, man.
Yeah, absolutely. Thanks for having me.
All right. See you.
All right. See ya.